Still nothing? What is going on here? What's this say? Wall Street explosion. What am I on now? Wall Street Jesus Flow Show. I don't. Click on Thursday Flow Show. Oh. It's not showing, is it? Oh, here we go. No. Yeah. Here we go. How come it didn't go to Twitter, though? Or did it? I don't see it on Twitter. But that's all right. Whatever. I mean, can I post a link on Twitter? Or how do I post a link on Twitter? It's working on Twitter? Why don't I see it on Twitter? I don't see it on Twitter. Oh, I'm not logged in here. I can't take this shit. Different passwords. Nope. Yeah, I don't think it's going to Twitter. STEAMROOM Trader? Why is it going there? Ay. Why is it going there? Do we know, Mario? All right, I retweeted it anyway. Let me post it. Oh, I think now I'm on. Yeah. What a minute. All right. Hello. How's everybody doing? How you doing? Here you go. Hold on, I want to post something here. Financial conditions. And this. I'm coming. Okay. All right, I'm ready. Yeah, let me mute a couple things over here. Give me a second. 1 second. Let everybody get a chance to get in here anyway. Mute and mute. All right. You know what's a day in my life without technical difficulties on a webinar? Right? It just wouldn't be the same. So I'm sure you guys come prepared for that. It's gone, so I don't need this anymore. Vamos. All right, let's talk some shop. Here we got a market honestly getting a bit tricky in my eyes, getting a bit messy. And we'll talk about that because I think that's something to pay attention to throughout the rest of the month and through earnings season here. All right, but to kind of touch base where we left off on the Thursday webinar, again, there's been nothing but bullish things to focus on here, right? If anything, if we can have it our way, we wish there was a few more things to worry about, kind of shake the tree a little bit and create some more opportunities, better opportunities or pullbacks, keep sentiment in check, as we drift higher. And it's kind of amazing to me already, even without the pullbacks, we still aren't at a point where the market has forced everybody in. Now, again, we don't want to get to that point. Hold on, let me get off a couple of things here. Right, we don't want to reach that point. We want to kind of prolong the process because the longer that takes, the better off we are. But as you can see, if you just pull up a chart of the S&P 500 and NASDAQ, it's been quite bullish, right? And what's that? Oh, I thought it was random to me. A couple of things I think we need to pay attention to through this month that I think kind of will be some interesting tells as we get into what's seasonally a tougher period. And let's start with that because I think that's a perfect segue into how things look like they may shake out here right now at this point in time. A lot of people are getting worried, or bears even getting kind of excited, licking their chops because of this extension here, right? Just on a price action basis. They're kind of expecting some sort of volatility event or pullback, okay? And the way I see it right now, signal-wise, is that if anything shows up to that point, right, if we do get some sort of catalyst that creates some selling, I still think we're at a point where these pullbacks are likely to be shallow and are more inclined to find buyers than sellers. Okay. Now, again, that all depends on what the catalyst is, right? I mean, you get a bearish enough of a catalyst, and that changes the story a bit. But because of how things shake out on the positioning side here, meaning that you still, like I said earlier, the market hasn't really forced everybody in the pool, so to speak. You're likely going to find these pullbacks, even though on a day-to-day basis, if they last a couple of days or a day, they may feel violent because of how much we've gone up. You may see an over-exaggerated move in volatility over a short period of time. But like I said, right now, from the way I see things, if there is a pop in VIX, it's more inclined to probably see sellers into that pop. And equities will probably find buyers because of how underexposed they've been, right? Because buyers, that's what they're waiting for, right? It gets to a point in the market when the market kind of takes off without you, right? Initially, you're not tempted to chase. especially on the smarter side, you're talking about some of the smarter money on the street, hedge funds and money managers and shit like that. They're hoping to get a pullback. All right, they're hoping to get a better entry, kind of a quick reset. So a lot of times when you get these, after you get this type of extension, you get some sort of event. Think like DeepSeek, right? You remember that? Something of that magnitude. It's not going to last very long until buyers show up. Okay, but the way things line up, and we were talking about this a bit on the Sunday webinar the last couple of weeks, and things can change quite rapidly, so you keep tabs on it. But the way it looks right now, if you wanted to paint a picture, is you get kind of more of what we're seeing right now, and we'll talk about that a bit, because I think that's the trickier part here, where we go into a market where there's more dispersion, right? You get less correlation, right? We talk about that a lot, right? As a rally starts, you get that high correlation where a lot of participation, everything involved. And then as a rally gets extended, before you do get that pullback, the correlation goes down quite significantly. And it's tougher. They call it a stock picker's market, but that doesn't even do it justice, because it's actually been a tougher time for a stock picker. You find yourself, indexes may be higher, but your stock is not doing anything, or that sector is underperforming on that particular day. So we likely get that type of wrinkle, and that lines up with earnings season quite well as we're going into earnings season. That also can create a mess. And that gets us through the month of July, right? And without that sell catalyst, more of a bullish tint to things. And as you get into August, I think that's where things get a lot more interesting, where if you do get a positive reaction to the bulk of earnings, and you do get some chasing, especially in some of the larger names that make up indexes, or if you get more participation on the cyclical side, which we're starting to see signs of, that's where you're going to see a lot of these positioning gauges that we pay attention to start to elevate. And interestingly enough, that also lines up with late August into September, which is a really tough time for equities, unlike July, which is extremely bullish, right? So again, you don't want to jump the gun and get hung up on that thesis, because things change, right? We could get some sort of sell catalyst and kind of get a nice reset over a couple days or even a week, and that changes things quite significantly in my eyes. Okay. But if this continues, and I think that's a higher probability scenario here, if this continues throughout the rest of this month, that's where I think we got bulls, and I say we, but if you've been bullish, if you've been long, you got to start paying closer attention to risk as we get into probably around mid-August. You'd rather be earlier than late, right? Because a lot of times what they do is they front run, especially seasonality, right? You saw it in July. Everybody expecting a strong July. We started to see that being front run seasonally. Buybacks, if you remember early on, the buyback window opened. They didn't wait for the buyback window to open. They kind of front ran that, right? So we may see more of the same as we get into August. Kind of the smarter money who's had long exposure and has made a lot of money start to protect some of their risk, right? And that's also where a lot of times you get that, not only dispersion in the tape that we're talking about, right, where stocks are marching to the beat of their own drum, but you also get kind of that VVIX divergence we like to pay attention to, where equities continue higher in a grind, but at the same time, VVIX has already carved out a low and has made the turn, right? And that's, I think, one of the more important things to pay attention to, kind of as an early sign of where a correction might take place, right? And again, as of now, even if it shakes out that way, again, I'm not a fortune teller, but again, with the information we have in front of us, even when we get that pullback in August, September, where it doesn't have to be the start of a bear market. That's where a lot of bears are going to take it, right? But you can easily get an 8% correction, depending on 8 to 10% correction, depending on how how much higher, how much we tack on from here, and that ends up being a great entry if you're set up for it. Okay, so yeah, I think we don't want to jump the gun yet and focus on that too much here. I think the more important thing to focus on right now is as we get into earnings season, you got to take on more risk, earnings risk, headline risk, not just that particular name that may be reporting earnings. There are other names in the group who could have an impact. But at the same time, I still think we can possibly find some opportunities, squeeze opportunities. They like to squeeze a lot of names out of favor names ahead of earnings. You get hedging, call side, short covering in a lot of names. We're already seeing a good amount of that. Okay, but it's more on a name by name basis and more of a tactical approach, I guess you can say. I think the big, like we've been talking about these big trades here, right? And all the excitement continues to be in those pockets, the AI pockets, kind of the new economy pockets in a sense, new names. And you're even now, it's spilled over into a lot more speculative stuff, right? We've seen that for a good amount of time now. And interestingly enough, that's where a lot of the short exposure has been, right? A lot of money has been getting long mega cap growth for at times when they're bullish, but shorting everything else. And you're starting, we've been seeing for quite a while now, a lot of big squeezes in that underbelly, high multiple, high growth sector of the market. A lot of those COVID winners coming back to life, a name like Unity, right? Those type of names have been seeing a lot of flow. So we can definitely see a continuation of that until we get to a point where we kind of need to reset here. Okay. But again, any little pullbacks along the way, like if we do have some sort of catalyst, and you never know, right? With Trump, it could be at any given point in time. I mean, you are extended enough to where there is going to be a little pullback. Okay. But I guess the point I'm trying to make is it's not a pullback, and this is how we've been framing it the last couple of member-only webinars on the Sunday. It's not necessarily a pullback I want to get completely out of the way of, right? There are pullbacks where when everybody's in the pool, there's a lot of supply that comes to market, and you really don't want to be holding a bag of long exposure through that, okay? And then you got the potential for a pullback where they can be a lot more shallow, and more inclined to find buyers in a short span of time, where it's not that easy to navigate. Get out, get back in. You understand? So for me, again, maybe it's different for you guys, right? I got to look myself in the mirror and be honest with myself. But for me, if you guys remember, the way I'm approaching things here now as we get into earnings season, I'm not looking to add any more risk on to what I have, right? So if I'm playing something new, I'm probably taking something off that I've been in, right? So I remain long. I still have exposure, but at the same time, I'm moving things around and not putting on any additional risk until we get some sort of rinse. Now, if we get, again, some sort of sell catalyst that creates a couple of day sell-off, that changes things. At that point, I may be more inclined to put on some risk there without taking any off. Okay, but that's kind of how I'm approaching things right now. Because again, I can't predict the future. Nobody can. We don't know when that catalyst may show up. That might create a little bit of selling. But I think the important thing to acknowledge is that we want to look at any sell like that as an opportunity to get long. And we don't want to be afraid of it in a sense. right? We don't want to be too afraid of it. Okay. So that's how I'm approaching it. Take that with what you will, apply to how you approach the game. And that's kind of where we stand, right? And you can see right on the chart. You don't have to be some technical guru or look at indicators. You get to a point, right? You see these Niners, right? You kind of run into a little bit of resistance, a little bit of chop in a sense. And if you kind of overshoot a little bit, that's where, more than not, you get a quick rinse to wipe some of that out, something like this. All right. So that's kind of how we're looking at things. And this is why, like if I run through, let me run through some of these things. Right. So if you look on a short-term basis, even the little bit of chop that we've dealt with here recently has cooled off some of these short-term measures, but they're still quite sticky up here. All right. The short-term sentiment comp that I show you guys on this webinar from time to time got up over 80. All right. So you got a retracement to 60, but usually above 60 is a place where, you got to consider your risk, all right, on a short-term basis. So we're seeing things like that. The squeezometer, which you guys know, that's been hanging around 60 for a while, got up as high as I think 67 before this little chop we entered. So that finished 61 today. Okay. And put the call. All right, I don't know if you guys have looked at the put the call, but you got a 4 handle on the equity put the call from CBOE Trade Alert that I follow. That's pretty toasty, right? But again, one day a sell will take care of a lot of that, right? So you got to understand it's just on a real tactical basis. Other stuff, like if you want to stretch it out a little bit, you got like single name put the call skews that aren't fried, right? Nowhere near as fried as we were coming into the year, where there was a lot more concern with, especially with everything else we were seeing. So you kind of, stuck in the middle there after that, extreme bullish signal into the lows of April. Okay, so you still have room there. You still have room before you need to kind of get overly concerned. Let's look at some of the other things I posted today. AAII sentiment survey. Again, if you remember, this thing was in the doldrums. Now you're up in the lower to mid 40s. Okay, still has room, but a lot more bullish than it's been. Let's look at some of the other things that are still in good shape here. Hold on. This is the vol control funds, and you've seen in a lot of the recent notes, Joe in the Steam Room, who runs the Steam Room Trader account on Twitter, likes to look at this stuff. The notes out of it, Charlie McElliott from Nomura and all, they still have buying to do, right? They still have buying to do. And that's kind of why I think if we do get any catalyst here that creates a sell, again, there's a higher probability that you find buyers into that and sellers into a VIX pop. Okay, that can change in a couple of weeks from now if they if they fill the tank up, as you can see here, right? But you still got some room, so nothing to really be too concerned about yet. CTAs, they kind of, right, when we're talking about this systematic crowd now, right? These CTAs kind of got stuck here a little bit, right? You had max short into the lows of the correction in April. They covered those shorts aggressively. Then they end up flipping to the long side. And now they're long, but not max long, right? So they still have room. They still have buying to do. More so globally from kind of the models we look at from JP Morgan and Goldman. So overall, globally, they still have a decent amount of buying to do. In U.S. markets, not as extreme, but still lean to the buy side, okay? And if we do get a continuation of a drift higher and volatility drips lower, you're going to have additional buying to kind of keep that bid in the indexes. Okay, so they're still not maxed out in a sense. This is another survey measure that's been elevating of recent. Got down here in April, has been coming back. Again, I don't look at these selectively. I look at them all within each other. Here are hedge funds. Okay, like we hear, I guess I don't know, on social media, you hear sometimes on CNBC or Bloomberg that hedge funds are chasing. They really aren't, from what I see. They really aren't chasing. Okay, they were short, and especially in certain pockets, it got to a point where they were aggressively covering shorts. Okay, then they put on a little long exposure, and we kind of seen that in a lot of the mega cap names, these big buy side orders and calls, and a lot of the big names of Microsoft and stuff like that. But that kind of teetered out. And now, some of these things I look at, this is the one from Sentiment Trader, they are back on the short side here. Okay, so they have not been, again, we got to that point here where we're at the crossroads. Do they finally take the bait and get long? Right? We've been to that point. How many times now we've talked about that? And once again, at those crossroads, they decided to sell and add some short exposure, hoping to get a dip and re-risk again, right? So again, that goes back to what I was saying earlier. If we do get some sort of catalyst that creates some selling, what's likely to happen here is they use that sell-off to add some exposure. Okay? So we'll see in a couple of weeks, or you get some positive earnings. Things, especially in earnings season, change quick, right? Especially you get these big names reporting earnings. What they end up doing, God only knows. But if we get to a point into August where these guys are caught on the long side, alongside everything else we may be seeing at that time, that's where we got to really take that into consideration. And you may be hearing me sing a different tune than I've been singing. What else we got here? Sharpies, right? So Sharpies were aggressively short into the highs before the market kind of rolled over, as you can see here. Then you got the pull. They covered those shorts. They dipped their beak on the long side, which is rare for them, right? They're commercial hedgers. They're supposed to hedge. And what's been really bullish is as this market has continued higher, right, we've been overextending to the upside without a pullback. Sharpies weren't taking off any long exposure, right? And what's totally normal for them to be doing is as a market starts to move higher, they take that exposure off. And if that market continues higher, running through stop signs, and more players get long, they will continue to hedge aggressively. Okay? So that hasn't been the case up until the last week, last week, I guess you could say. You could see they trimmed that long exposure, and you could call them neutral right now, right? So again, what is more likely to happen here is if the market continues to grind higher and it reels in more bulls on the long side, Sharpies will probably end up back down here, hedged as the market continues higher. Okay? And that would be a concern, right? Obviously. But right now, it is not. Here's another look here with Sharpies. Sharpies are the commercial hedges, again, the red line. And hedge funds are the green line. Hedge funds were short futures, equity index futures as a whole, coming into last week. Short. Okay? They covered that short last week. Hence why Sharpies, part of the reason why Sharpies trim their long exposure. Okay. And on top of that, this is the retail specs, smaller specs. Okay. They had no long exposure at all. And you can see this little bump up here. They finally dipped their beak on the long side. Financial conditions. I mean, we've been talking about this a lot. I don't think people have been talking about it enough. You know, you hear Trump beating the drum about cutting rates, and it's not just him. You have a lot of people thinking that the Fed should be cutting rates because of housing, whatever reason. But, you know, you hear out of Powell's mouth every other sentence him talk about financial conditions. You remember 2022 throughout that bear market, this is one of their main tools, right? They feel they can control financial conditions to kind of slow things down, loosen things up. But as you can see here, and if you've been on this webinar or a member in the Steam Room, we've been looking at this chart a lot as it's been happening. This was into Liberation Day and the correction lows. Okay? Financial conditions were as tight as we've seen them, even going back to the 2022 bear market. Okay? But you can see how aggressive they've been loosening here throughout this rally in equities. Okay? No pivot from the Fed, no rate cuts as far as I know, but financial conditions have pretty much flip-flopped from one side to the other. Okay? Again, if you're looking at a chart of the last few years here, you can see it's kind of at that floor where financial conditions usually stop loosening and then eventually tighten. But that could be a process, right? That could be a process. But again, it just goes to show you why we're seeing speculation out there. Some of the economic data coming in a little better than expected. No crack in the economic data. Financial conditions are not tight. And you know, usually when the Fed's cutting rates, aside from giving Biden the gimme for the election last year, usually financial conditions are part of the process that forces the Fed to cut rates. Not when they're extremely loose like this. And that goes, I think, hand in hand with liquidity. Right? There are plenty of liquidity charts, liquidity indicators out there. This is kind of M2 global liquidity. You can see the correlation with equities, risk assets, Bitcoin, and there's kind of a lead here as well. Kind of shows you how this shakes out over the next 2 months. And this started to turn pretty aggressively even before equities found the bottom and turn. And you can see, even by looking just at the yellow trend line, this thing's been continuing higher. Now, what does this look like from here? Do we get a little dippity-doo-dah like this? Right? Kind of maybe an early tell that liquidity won't be as robust into August, September, again, lining up with seasonally what the corrective period in the markets? We shall find out. Okay, but again, as of now, I'm kind of surprised, and we've been talking about this in the room, as you guys know. It kind of surprised me Bitcoin just broke out. Like, you look at the Bitcoin correlation. Oh, I don't have it on here. But if you look at the Bitcoin correlation, there's even a higher correlation to Bitcoin than equities. So Bitcoin, I really didn't see this little consolidation in Bitcoin before the breakout. I thought it was just going to go. But kind of equities continued and Bitcoin consolidated a little bit, but just broke out now. All right. So we'll see again. We'll see how that shakes out. I'm sure people have an opinion on how that might shake out over the next month. But I'm not really too interested in people's opinions, to tell you the truth. All right? We'll see the evidence. And I think that's it. Let me see. Anything interesting that I looked at today? What is this? That's NAM. I think that's it, guys. I think that's it as far as, oh, here's another measure of financial conditions. This is Goldman's, right? So this is globally, and you can see it going back to 2013. You can see how they fell off a cliff here, right? And you like, for example, this, which is similar, that was the Powell pivot in 2023. This was the Powell gimme rate cut for Biden. You know, this, I don't know. Where'd this come from? What was the catalyst here? I have no idea. But they've loosened considerably. And that's usually a good thing for risk assets. Here's our tactical sentiment indicator, right? It's been kind of banging its head around sell signal. So, oh, here's kind of vol control funds, so you get an idea. All right. So here's equity exposure in the red, and it kind of tailed realized vol, and you can see kind of the gap here, right? Pretty decent gap. So again, why, you know, this is part of the reason I think that these dips will remain shallow for now until some of this stuff catches up. All right. So again, I tell you guys what I'm doing, not to sound like a know-it-all and push you guys to do the same thing, but just so you get an idea of how I'm approaching it. And, you know, you can get an idea of maybe, you know, what I'm trying to get at and apply it to what the signals imply to what you got going on, right? So I told you, in overall, I'm not looking to add any additional risk on. Names, I've been farting around recently in some of these speculative names, playing around, but nothing crazy size-wise. My main positions right now, one of them I have to make a move here on the Soxel, but I have SOX exposure, SOXL exposure to the semis. I bought that kind of a little bit earlier than the small cap exposure that I told you guys I have via TNA. The TNA, the way I'm playing it is I'm looking for IWM new highs, right? Not TNA new highs, because there's a big difference. I know I keep saying that, but just so you guys, because TNA is levered and there's drawdown, for TNA to get back to new highs, it's not going to line up with IWM getting back to new highs, right? Because percentage-wise, it's a lot different now. But I'm looking to sell my TNA and more than likely roll probably all the profits into IWM calls with time at that point, right? So I'm still going to keep exposure into IWM via calls with a lot of time, more than likely leaps. But I'm going to take some risk off the table at that point. Soxel, I'm looking to kind of do that soon in the Soxel. All right, because Sox is kind of there, right? And, you know, you got earnings season coming up too, so I kind of want to be smart about it. But the Soxel, I'm still trying to figure out what I want to do. You know, whether I want to buy SMH calls with time, or maybe a couple semis that I like, maybe cyclical semis. I still haven't come to a conclusion there, but I got to make a move there. Thank you, Mario. I appreciate that. So that's kind of my playbook there, right? IWM, I'm giving more of a leash to because, you know, we've talked about it the last few weeks, right? It's been a serious laggard. It's like, I mean, rate cuts have kind of been driving the narrative there. But, you know, you got all the indexes now kind of breaking new highs, if not at new highs. IWM is playing catch-up mode. And again, I think, positioning right now, people aren't positioned for kind of a full participation bull run. If you were to talk about pain trade, that's where the most pain is. That's where the most pain is. So you need a couple things to really fall into place there. We're starting to see little by little some of those things are falling into place, but you get a little lucky, and some of these confident measures and the economy and rate cuts, you start to check off those type of boxes, and I think you got a lot of upside in IWM and some of these cyclical, economically sensitive type names. And that applies to tech as well. You got semis that are cyclical that really didn't participate as much. But you got a lot of cheap stocks out there outside of these hot pockets that have really been the focus, right, for a couple years now. So I don't think it's going to be the new narrative in a sense. Like I don't think AI is going anywhere. I don't think any of the exciting parts of tech and growth are going anywhere. But I believe you're going to see more involvement in the other things, right? So now when some of these hot pockets need to cool, we're probably going to see some real buying in the more cyclical parts of the market, right? And if you remember, rewind, right? And this is where, sometimes it pays to be a contrarian, but you had, and we talk about this a lot, you had the Trump running, right? He wasn't even president yet, but based on him taking the lead in the polls, you had that trade put on, right? It was almost like the Make America Great Again trade, blah, 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 right? Bitcoin ripping, all the cyclical parts of the market, small caps caught a bid, okay? And then, they overdid it in a short amount of time. They forgot all the bad that Trump is going to bring in the Trump package with them, tariff-wise and stuff like that, right? And it was pretty obvious that Trump was going to front-load all that stuff, especially with inflation on the hotter side. As that starts to flip to the other side, right, we saw it in Trump 1, okay? That's where you'll see some of the other things like small caps and these more cyclical names really start to participate. And again, we're seeing it already. I just, we haven't seen it full-fledged here, right? Like have you looked at a Boeing recently? It looks a lot different. Looks a lot more constructive, right? Come a long way here. The banks were part of that, right? The banks were kind of the big sector, the only sector they really wanted to buy for whatever reason. Goldman, I think, is the prototypical Trump trade. And, you got a complete breakout there. So I think little by little, we're going to start to see it in other areas of the market. I think small caps are going to be a part of that. Okay. So again, being that kind of the way I'm looking at things, and this is something else, if you remember, we've been talking about a lot, especially with members. You don't want to try to micromanage things too much. You know what I mean? If you're on the same page and you've been on the same page, right? You're leaning bullish, kind of for certain reasons, what the reasons we look at. You don't want to micromanage every intraday or daily move, meaning that, just because you agree with that thesis doesn't mean that you're going to get long something every day and make money. Right? Doesn't mean that you're going to get out in time for every little pullback. Right? So you don't want to paper cut yourself to death getting too cute. Right? You want to try to take advantage of these shakeouts and pullbacks when they show up, right? When things get a little too bubbly, too extended, and you see, some of the indicators we pay attention to, especially on the shorter side, you want to kind of be more inclined to pay attention to some of the risk you have out there, but at the same time, you want to hang on to exposure, especially if you have decent cost. It's not that easy to get out, get in, get back out again. It's not that easy, right? So if anything, you want to kind of trade around that stuff, but at the same time, you shouldn't have FOMO, right? If you're doing things right, you shouldn't have FOMO in this market. That means you're just micromanaging things. You're getting too out of control. Yeah, and I mean, like, Sahil, we've been talking about IWM for a while, hoping the breakout would come. But at the same time, a lot of times the market was pricing in rate cuts, thinking it was coming, and it didn't, right? So it's led to these drawdowns. But I just think this is what I was looking at. You know what I mean? I was just looking at plain and simple, guys. You have such underexposure in this market, especially to things like this. Like this is the pain trade, right? Nobody's in this trade. You get a breakout in small caps where now institutions need to start buying, right, small and mid caps again. You got a lot of ammo on the sidelines, a lot of ammo. And you're not talking about insane multiples, right? You can make the argument. You get NVIDIA's at a $5 trillion market cap. This one is at 50 times earnings. You make the argument like it's a little risky getting long up here. I get it. But you have parts of the market that have been neglected and ignored for so long. So if you're finally starting to see some momentum build, some buying starting to stir up, right? Front running that potential breakout on a risk reward basis, it's worth a shot. And again, you can be really smart about it, right? And play off the momentum, take some chips off the table, and leave some exposure that you can be a lot more patient with, right? And when we get pullbacks, and that's ultimately what I'm looking to do, right? I'm looking to take advantage of this momentum and then eventually take some chips off the table that if we do have some sort of correction, I can re-up again, right? I could add into it again at a much better entry. So that's kind of how I'm looking at things. Yeah, exactly. You got 490 S&P 500 companies that, aren't that expensive. So, and that's on top of, you got to understand too, if you start to get rate cuts and you start to get some economic growth and you get the small and mid caps involved, forget even the 490 S&P 500 companies, you start seeing new companies, new names, right? The IPO market starts to heat up, right? Existing companies that you never even knew there was no reason for them to be public. They've been dead money for so long, but now they're starting to see some growth, whether they're involved in AI or any other shit. So there's a lot of people focus on the concentration and where all the heat is. I get it. I understand why they focus on it, but I think what they're not focusing on is everything else that's out there. And if somebody likes that match, right? So that's what I think we got to keep our eyes peeled. And right now, the proof right now we're seeing, the evidence we're seeing is that's starting up, right? We're starting to see signs of that. So we'll see how this all shakes out, right? But again, we don't want to get too hung up on prediction. You have a thesis, that's fine. You put it in place. You're paying attention to the signals as they change, and you react accordingly. You don't want to build up too much of a bias where you get crazy And then if you're wrong, you get hit over the head and you're done. All right, so we kind of want to be prudent along the way. All right. Today's action, we always talk about some action. Yeah, we're going into earnings season to get tough again, talking about names. There's been a ton, as you guys know, we've been talking about all these smaller speculative names that have been getting hot. Today, out of all names, Neo. Somebody came in and bought a 175 fund, 175,000 Neo this afternoon. NIO. These September 3.5s. I mean, they gobbled them up. Okay. I get it. It's Neo. But, you know, I can say that about so many names out there that have been seeing action. You know, just these older, broken down valises. Spot-wise, it's not the worst thing in the world. Right? No rally there. Dead money. There's some other EV names that I think are better quality-wise, but I don't know too much about them. Right? You got XPEV and LI, but this is where the action showed up this afternoon. NIO. Okay? Again, 175. Here, I'll show you. Top line there. See that? 174,900 September 3.5. And it was aggressive. All right. That was really the only action that stood out to me today that was kind of clean. Everything else, a lot of repeat names. A lot of these repeat names, it looks like there was some closing action there, so they could be rolling. There were a few decent looking orders. They look like they're positioning for earnings. They have earnings in a week or two. So a lot of that stuff, we're going to see a lot of that stuff as we get into earnings season now. And, you know, that's what kind of these more aggressive names, these names that catch this type of action, I'm going to be looking to play through earnings season and trying to dodge earnings. So I'm not going to be sitting in them too long. But I'm looking for kind of the more aggressive buying to at least create some momentum, being that there's going to be a lot of earnings position. Yesterday, Coin, they really came after these Bitcoin names. Yesterday started up early afternoon. So it was kind of a tell on the possibility of Bitcoin breaking out. Where's Coin? Where's the thing here? Here it is. So we saw a good maybe 15 of these from, what was it, maybe 2 o'clock on, 1:30 on. Some weeklies, mostly July 370s, July 400s, July 390s, July 380s. So they really came after the coin. And coin had that big move, as you guys know, and has been trading sideways. And then now has broken out from there. Been a hot name. Okay. A lot of the other actions like this, right? Here. OUST. Like you remember this name. A lot of us played it. Okay. You're talking about buying that came in here. All right. You had this big rip, little dippity doodah, and you know, you got repeat action here. So stocks up 13 from there. A lot of these things. Another pocket that I'm kind of keeping an eye on here for trades. And I don't want to hold through earnings, but it's kind of these post-IPO names. Not even post-IPO. It was kind of the sweet spot of the market before these cheaper names got involved. So kind of these guys. TEM. That space stock that we own a little of. Here, what the hell is that symbol again? I keep forgetting that symbol. The IPO. Hold on. Let me look at my account here. Where's my... Oh. It is. What else? VOYG. Oh, there you go. I could have just waited. VOYG. Like these stocks have been just laying dead. Which is good. Which is good if you're looking for kind of trades here, right? So we see a little bit of action in any of these guys. I already own some VOYG. I'm going to hang on to, but if we see some flow come in here, I'll look for a trade to pop out of here and sell it, that type of thing. Yeah, so that sort of stuff. That's what I'm kind of going to focus on for the next couple of weeks. Yeah, and I think I bought it right here. I don't know if where you bought it, CL. I bought it right here, so I'm down a little on it, but I remember because it popped like the next day or two after I bought it, and I didn't sell it, and it was a nice pop. But what I have, I'm leaving alone, and here, if it catches some action, I'm going to look to trade it. So what names? Yeah, I see you guys talking about some cheap names here. LCID, these are just names. I don't want to hold I don't want to buy and hold these names. I don't even like to trade these names, to be quite honest. But I get it. If you're trading them. Again, risk reward wise down here, you're not. If I'm looking at it through the equity point of view, you're not going to get mangled. So I rather right now going into earnings season, I rather look to try to get lucky and catch some momentum out of this than chase something that is up in a straight line. So that's kind of what I'm more focused on now, is finding something like this and looking to see if there's some flow come in, trade the momentum, get out of it type of thing. Yeah, Neo I just spoke about. I didn't buy any Neo yet, but I may buy it tomorrow. Some of these China names have been seeing an uptick in action. This Tiger, which always catches some buying. A few other China names. A couple of you were trading that. Oh, this name. See, and this is what I mean. Like, here's a perfect example, right? This is what I'm talking about. Oh. So you had this huge move, obviously. Okay. So right now, I don't want to be buying something here. Okay. No matter how exciting the stock may look. Okay. At this point where we're at, going into earnings season, what I'd rather focus on, right, is something that may be catching action here and looking for this type of momentum, but I'm going to sell into that. If you like the name, you may want to hold it. But these type of names, I'm looking to just, if the momentum comes, sell into, right? And kind of trade off this floor. I'm not going to marry it. So I feel a lot more comfortable, again, at the point where we're at in this market right now, approaching it in that way. EDHL got pumped by a hedge fund. What was that? EDHL? I don't know that one. EDHL. Everbright Digital Holding. I don't know. Does trade options? I don't know this one. VNet, yeah. I kind of like this VNet even longer term. Put it this way, if you want to make a play on China AI, I think this VNet is worth a shot. Now, it's an ADR. It trades in China. So whatever that does in China, this is going to do. You know what I mean? But they're a big player in AI in China. They're a big player. Another name is this name here that I know has some institutional backing. GDS has been seeing September buying, I think it is. I don't want to get too crazy in China. I don't want to build a basket of China names. If anything, I'll trade them, but I want to be quick. But I see nothing wrong with buying some GDS calls or VNet calls and giving it a leash. So again, I'm going to go where the flow goes. All right, like right now, of recent, it's been mostly in Bitcoin proxy plays. All right. I got out of this one yesterday. This one I made a nice hit on, this cipher. A lot of buyout talk around it. Irene, this thing had a killer move. But, listen, I get the excitement. We were talking about it. Like, these names, I get why they're being bought up right now. But, I left some cipher. I left a little piece of cipher just in case it becomes a real one day. But I made some nice money on it. So I'm totally fine getting out here. Let it go, right? And I'm look for something else to buy at a decent entry. What was another name? Hold on. I always draw blanks on this webinar because it's after the close. What did I buy? Oh, I bought I owned some Wolf from a year and a half ago that I left behind. So I added some Wolf. I added to Wolf. Wolf and Hut. I added a little Hut. So that's kind of the Bitcoin / AI related plays I have right now. From last quarter, what has been your biggest trade percentage-wise? Last quarter. What's last quarter? What quarter are we in right now? Percentage-wise or dollar-wise? You're talking percentage-wise? Oh, theme. I really, honestly, I haven't, the majority of kind of everything I've been doing has been the last couple of months since the correction. Prior to that, I didn't do anything. So I didn't make any major moves at all. I came into, I don't know if you were around, but come March, I was really, really skittish about the market. I was really cautious. So now I'm singing a completely different tune, as you know. But I remember like late February, March, I didn't feel good about holding any weight at all. So I wasn't doing anything. So theme-wise now, since April, hasn't really been theme-wise. Like I said, small caps, dollar-wise, small caps and semis. I've had some exposure in, and I've been trading a lot of these smaller cap names. Kind of some of these names I've been talking about now. But early in the year, I did nothing. I did absolutely nothing. But you got to understand there's reasons behind it. The reason I was so cautious, coming towards the end of that first quarter, everything you're looking at that I'm showing you here, right, that's been bullish and playing out was the complete opposite. For example, like here, vol control funds, they were all in. CTAs, they were max long. So basically, you had everybody by the time March, the end of February rolled around. Okay, so right here, let's say, right here. Okay, as the market was still up at highs, and everybody still was drunk off the Trump win, right? Because here, everybody was bulled up post-election, right? Going into the election. Okay. You had everybody long. Everybody you can possibly think of was already long. Okay. You had correlation, we were talking about a lot, extreme lows, right? I don't know if you were around, but the whole, literally, probably the month of February, March, that's all we were talking about. And I know probably most didn't want to hear it, and hopefully it didn't fall on deaf ears completely, but there were enough warning signs that something like this was coming, to get out of the way. Sharpies, which we looked at here, right? Yeah. What do you got? Oh, it's over here. Right? Here's where they were. Aggressively short. Okay. Here. Single stock, put the call skew. Look where it is. Oh, no. Here. My bad. That was into the lows. All right. So coming into the year, you made new lows there. Everybody was all in. You started to see some divergence in credit spreads. There was enough warning signs. So that's kind of how I look at things as a measure where I should, open up and put on some risk, or where I should take some chips off the table. And if I'm seeing enough warning signs, I don't mind taking them all off the table. I'm not going to lie to you. People tell you in the steam room, I'll go couple months without doing much of anything. I'm trading my own book. I have no one putting a gun to my head. I think that's the beauty of trading your own account. So, but this correction did a lot of good. I mean, it did a lot of good. We were talking about throughout the whole drawdown that, we're getting there. Then you reach a point where everything is there. Now, I'll be the first to admit it. I wasn't anticipating a V-shaped recovery, but then again, what isn't a V-shaped recovery these days, right? I thought it'd be more drawn out than what we've seen so far, but those are impossible to predict because you don't know how it's all going to shake out, right? If you were to tell me hedge funds would still be short at this point in the rally, I wouldn't have thought that. Right? So here's like another indicator I like that takes everything into account. I've showed you guys this. I posted on Twitter too. Hold on. It's over here. Come on. Oh, here it is. Hold on. No, Tuesday. Where's Sunday? The DB indicator. You see me posting a lot. Here it is. Down here. Okay. Here's the February. Again, I told you I was really cautious at the end of February, right? Here's where we were in February. Right? And here's where we got down to into the April lows. So again, it's just kind of a compass. Right? A compass of where I want to risk the most and where I want to focus on how much I have at risk and stop worrying about how much money I'm going to make. And currently we're right here. All right. But again, it doesn't happen that way all the time where there's so many things that were flashing caution in March. So many. So many. Let me get to the bottom here again. Jeez. Thank you, Mr. Ruiz. I had anxiety all week. They call me the psychiatrist, Stavro. They call me the psychiatrist. You come here with your anxiety, and I'm like a walking Xanax. I calm your nerves. Yeah, again, that's what I'm trying to getting at, right? If you get a little pullback here, who knows? I have no idea, right? I don't know. Anything can create a little bit of some selling here. But I think that selling is an opportunity to get long right now, as opposed of the start of something major to the downside. Right? So you get these dips along the way, right? Some a little more, some a little less than you hope or you think. Okay. But again, the warning signs that were here are not there yet. They're not there. They're not there yet. And I just think big picture wise, there's still a lot of constructive things out there at play. And I hope we don't wash them all away at once. Like the more you get these little drawdowns, the longer this can go on for. These little drawdowns help a lot, right? They keep people in check. But I think even if you're concerned about a little mini correction, I would keep an eye on VVIX. Okay. If the market is continuing to do what it's doing right now, where you get this messy grind, and you start to see this thing coming out a little bit, right? So diverging, that's more than likely tipping you off that some sort of rinse is coming. If you're concerned about any sort of rinse. Right? Like, here's an example of that. This was doing this, if I'm not mistaken, and we can look at a chart. I think it was that, but this started to do this as the equity market was still, holding up, not flinching. So that'll tip you off that some of the smarter money is using the grind to put on insurance and protection. You know what I mean? That's kind of what it's telling you. Oh, here, look, I can look at it. Okay, here. So here, this will show it better, right? If you can make it out here. Let me see. Okay. So you see where that circle is, right? This is where VVIX started to make a move here. Then you got this little breather here. That's when VVIX came down. And then it started up here, right? So as you're getting a little bit of a rebound and stability here, VVIX was getting ready to rip. Again, just an early tell of a possible rinse coming. Okay. But I want to make it clear, like, again, right now, okay, if we get a pullback right now, I'm not looking to sell everything and get into cash. You understand what I'm saying? Okay. I'm not looking to put on any new risk here, right? I'm not looking to put on any new positions here, fresh money. Okay. But at the same time, I'm not getting into all cash like I was in February. All right. I'm looking to hold through any pullback and take advantage of the pullback and then add risk. DJT, I mean that's the Trump stock, right? Yeah, I don't know about it. I'm being honest. I don't know. I mean the flow in here is kind of scattered. There's no real bias. Doesn't really catch clean action. It used to, but it doesn't really catch clean action anymore. But I don't know. I don't know about this thing. Like these are pure speculative names. Like what is it even a play on? Trump? You know what I mean? Is it a Bitcoin play? Is that why you like it? I just. Oh. My bad, Juan. Yeah. And that's the other thing. Like, look, just I don't know what made me think of this with the Dow theory, but the home builders, right, have found the bottom, have carved out a low, more a rate play. But Juan's talking about the transportation, the trannies. My bad, Juan. Ooh, what's the symbol? It's IYT, isn't it? Oh, you're talking about Dow Jones theory. That's why, yeah. I got you. Oh, Juan, you got to forgive me. It's after hours here, But no, look, all kidding aside, like, look at the transportation names. All right? Look how strong they've been. Constructive sign, no? For a market that you're hearing about thin participation, I see a lot of good things happening under the hood. And to that point, guys, what very easily we can see too over the next month and a half is kind of this back and forth, right? We see a lot of that in this market, if you remember, before the April correction. All right, money goes here, money goes there, some money comes out of here, goes there. And that can get annoying too. But for tactical trading purposes, it's not awful. And if you're holding exposure in certain things, it's not awful. What? God. What is the cleanest action you've seen? That's a great question. Those type, not coin. Honestly, believe it or not, and I can't even lie to you, I haven't really seen, for the type of action coin can catch, prior to yesterday's action, really didn't see anything that got me excited, that really impressed me, because coin, the type of action I like in coin is what I showed you, that appetite. So kind of like this stuff. Like when they want coin, when they're making a play on coin, you see the conviction in the flow. They come bink, 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 bink. They feel like they can't get enough of it. But the other name you mentioned, that's the name. This, hands down, has been the most impressive flow. And honestly, I'm going back now to even last year. Going back to last year. They've been buying hood, not with two hands, with three hands. Bombs. A lot of us in the steam room owned hood. We were in hood back here. But who the hell thought hood was going to be $100 piece of paper? Not me. But honestly, in my opinion, Hood takes the cake as far as clean, aggressive, real buying, like institutional buying. And even now, yes, the heel, I'll tell you, it's the heel's in the room. Even now, like you see orders recently, they started buying, what was it, July 50s, 60s? Then they roll them up to the 70s, the 80s, the 90s, and then the hundreds. It's unbelievable. It really is unbelievable. So much buying, so much quality buying. So yeah, Hood is, if you would ask me which name had the cleanest, sharpest action, for a while now. For a while. Bull, yeah, Bull doesn't see that type of action yet. This is Webull, right? And I think this isn't it China, or it may not be China, I don't know. But again, flow wise, I'm just talking flow. Like, I mean, there were people in the room that, well, there were some people who really liked Hood and some people who didn't like it at all, but I'm just talking strictly flow. Bombs, absolute bombs. STNG CEO buys stock today. Is that what happened? I saw a little bit of flow there today. I didn't see that. Did you hear that, or you're just saying because it had a pop, Horizon? Oh, you're saying probably him. Wow. I didn't even think of that. Usually we see him showing up, Robin the Hood. Usually we see him showing up in leaps in STNG. But to your question, who asked that? That was a good question. Oh, Giancarlo. Giancarlo, the more speculative names, that's where a lot of the buying has showed up of recent in this rally. Even prior to that, right? You had these guys when they were red hot, right? The Rigettis, QBTS, like a lot of these more speculative names. That's where this Irene, they bombed the living piss out of. They really came after this Irene here, right here. Look. And you see it, see that, and that's why this flow has been better, even though they're speculative names. They stand out on the chart. You can't miss it. There's so much money in the option market. It's crazy. So much money. SMCI, we've seen some buying in, nothing crazy, but there was, I think, what was the market? I don't know, maybe Sahil knows. There's been some buying in SMCI. There's been some buying. AMD caught fire. That saw some nice buying. Oh, you know what we've been seeing, guys? I don't know if you've been paying attention, but off the April lows, if you remember we were talking about the 2027 leap buying that we were saying was probably SoftBank. Remember all those names? ARM. We've been seeing them close. So they've been taking profit in these leaps, the 2027 leaps. In some of them. But that was off the, and that's another reason why I didn't think we were going to V-bottom. I thought we'd rally and then kind of consolidate, because the quality buying initially that came out off the lows was in those 2027 leaps. A lot of net, right? Net caught leap buying, had a crazy move. Oh, what happened with software today? Why was software down today? because somebody was telling me because of some AI update. Was that the reason? On software? There were a lot of and they could use a little rest, but open AI, right? Ah, so it was that. Interesting. Because yeah, you had selling across the board. I saw now was down, right? Yeah, look at that. Ah, that's what it is. Ah, yeah, I heard them in Perplexity or some shit like that. So they sold off. So you guys, what do you guys think? You think it's short lived, or you think it's a real problem? You think it's like a deep seek? Same thing like remember Deep Seek when they sold the shit off? Noise, huh? Well, this is good anyhow. Let them, let them sell a couple of these studs. They create opportunities. It sucks that we're going into earnings season now. That's the problem with the flow now. We're going into earnings season. Oh, here's the other thing, right? And you guys remember, a couple of you guys brought it up to me. This Ethereum buying they've been buying. They bought more of this week and last week. You bought Ethereum, Sahil? Oh, now he's saying. What's the Ethereum? What the? Am I typing? What? Why are they gonna confuse me? Just give me Ethereum, please. The quote. Struck, took Ether. Nice. Yeah. So this is another catch-up play, right? You bought ETH when the circle shit happened. Very nice. But there's been a lot of December buying in the ETFs. These two, ETH, ETHE, and ETHA. At $100? Wait. What do you mean $100? This here, Mario? The one at 3,000? Oh my God. I don't mean to laugh. That'll drive you nuts, this shit, huh? Yeah, it's kind of the catch-up play. So that's where like we've been seeing a good amount of buying in these ETFs. I don't know the quality of these ETFs, because sometimes they could get wonky, but there's been a lot of flow. This is what they played. Oh, this is yesterday. Those puts were sold, these. September 30s. But if you go further back, where are the Decembers? June. Is this it? No. Both ETFs more bullish flow. Is it? Nope, that's not it. I'm talking about like heavy action. What the? Oh, maybe it's ETHA, the big December action. Yeah, this gotta be it. Here it is. See, so these December bullets, look, December 19's 400 grand. December 19's another 400 grand. 150 grand. This is the type of buying. Wow, Mario, that's crazy. Well, at least you got a good story when it's at 10,000. What are you gonna do, Mario? That's the game, you know. Here's some May buying, decent size, a lot of buying. So it looks like this ETHA they've been buying more of than the ETHE for whatever reason. See, look, there's a nice sweep here. Look at this. September 13th, when it was 12 and change. ETHA. I contemplated, you know, I was thinking about buying it, but you don't want me buying crypto. Hey, you know what I mean? You don't want me putting a kibosh on crypto for you. You want me buying a Bitcoin miner. That's the extent of it. Yeah. I don't blame you, Struck. Bombs indeed. Bombs indeed. Mr. Ruiz, I've been a crypto skeptic for a long time. A long time. But you know, I'm older generation. You know, I don't know what that. I still don't know what the hell a Bitcoin is. Forget about Ethereum. I have no clue. I don't have the slightest clue what Ethereum is. Yeah, bonk. Yeah, but I think that is my main problem is that I throw things like Bitcoin, Ethereum in the same bucket with Coin and everything else that's going on out there. You know what I mean? That's what I shouldn't be doing. Right? Doge, all this crap. I think the first recession that ever shows up, whenever it does show up, and you got people losing jobs and shit like that, you could have the biggest bust ever in those things. Ever. So, but, you know, and I think it caught you know what I think really saved its ass this shit? Trump. I really do. You know what kind of boost Trump winning the election did for this shit? Giving it a second life? I mean, basically opened up the doors for everything here, no? Yeah. Oh, for volatility and gambling purposes, there's nothing better, right? These things trade 24/7. That's the part I love about it. I'm just talking about the business and the mechanics behind it. I have, you know what I mean? Bitcoin imaginary wallets and shit. I am lost. I'm lucky I could turn my computer on one. Forget about that shit. Yeah, I mean, Trump was Bitcoin, these Bitcoin bros, what dream, Trump? You know, they got rid of the SEC guy he wouldn't crack, right? Changed the game bigly for him. Yeah, that's what you got a lot of shenanigans in that space. Yeah, we saw it even with the other guy with the 5 names who's in jail, you know, with the afro. When things pop, you're gonna see everything. You know, again, we went through a boom like that in every housing. They did it with the mortgages. You did it with chop stocks back in my day, right? The boiler room operations, you know. So you don't see the true colors until you go through a tough time. We haven't, because of the Fed, we haven't gone through a legit tough time yet. You know, at some point it's going to come. Yeah, right. Gary, that's his name, Gary Gensler. Right, got rid of any obstacle in its way. So, but listen, we've seen Bitcoin right throughout these what do you call them, winters or what, bear markets, right? I mean, get destroyed and come back to life. So, wouldn't shock anybody if it gets destroyed again. But what I'm saying is a lot of the other shit around it is going to be buried. A lot, you know what I mean? They're going to be done. Like, I'm not saying Bitcoin goes away, but I'm saying a lot of the other stuff will. And then they'll come out with new shit again. Yeah, well, that's a lot of people think that, right? Because they've been more involved. They've been kind of letting their hair down in the space for a while. But again, it's just above my pay grade. But like you said, the volatility's there. Trading wise, I get it. Just investment wise, I have no idea what any of this shit does. You know what? Nothing. I don't have a clue. I do not have a clue. All right, everybody. Ooh, what did I do here? Oh, I can't believe the end of the week's here already. Tomorrow's Friday again. I say this every time. These weeks, it's. I can't. I'm 80 years old already. I can't take it anymore. How's tomorrow Friday? This week is over with completely. Remarkable. But anyway, let's see what happens. Again, I think any little shake and bake over the short term here as things line up, again, I think it'll be shallow, quick. I think it's viable, unless it's some time bomb that we don't know about. But again, once we get into August, we're going to have to start talking about the other stuff a little bit more, I think. So, but no reason to jump the gun. Let's see how earnings shake out. There's still some stuff to trade and all. Still some upside to be had. And we'll cross that bridge when we come to it. Yep. Everybody, enjoy the rest of your evening. Thanks for stopping by, as always. And I'll see you STEAMROOM members mañana. Have a good night, everybody.